to another episode of the Climb Finance Show. This show focuses on investment markets, business, and general economics. So without further ado, let's get into today's show. Today, we're just doing a brief overview of the financial markets, what has been going on over the last 3 weeks, because things are quite frankly just so interesting and so intriguing. If we take a look at the stock market, it doesn't really show the most exciting thing in the world. But before we get into that, let me explain what we're doing today. We're going to look at the stock market. We're going to look at Treasury Yields, because if you keep your ear around town, you know interest rates are all the buzz nowadays. Then we're going to look at gold prices, which are at record highs in the history of the world. And then we're going to take a look at the strength of the US dollar, as that is a major catalyst in the gold price. And lastly, we'll take a look at Bitcoin, which is also surging. So taking a look at the year-to-date chart of the S&P 500. This week or the previous week, the S&P 500 closed at its highest level all year, which is fantastic news. It's not that much of a surprise that the S&P 500 is closing yearly highs while the 10-year Treasury rate has been declining ever since October 15. You know, it seems like from summer into all anyone talked about was interest rates, mortgage rates, etc. And it's interesting enough that once everyone starts talking about it, these things start to decline. October 15th, 10-year had a high of 4.92, down to 4.2 currently. Take a look at my last video on the yield curve for US Treasuries for more information on Treasuries and interest rates. But the main thing I wanted to talk about today is the move in gold prices, because, you know, we did a video a few weeks ago about gold and silver and how they really started surging in the wake of the Israel-Hamas war. Well, gold prices have hit $2,100 per ounce for a record high, and analysts don't expect it to stop there. This is an article by Li Ying Shan, essentially saying prices have been rising for the last 2 months. Global rush. Essentially what we have here is prices for the yellow metal have soared with the Israel-Hamas conflict, as well as expectations for interest rate cuts. Mainly because in terms of interest rate cuts, essentially what you have is when yields and interest rates fall, that means that assets that do not produce a yield become more attractive. In this sense, gold. Gold doesn't produce a yield, therefore it becomes attractive when the alternatives decline. So really, as people expect rate cuts in the near future, as well as these geopolitical tensions and warfare, it makes gold a very attractive asset, as this strategist says, not just now, but for 2024 as well, estimating $2,200 by the end of 2024. I think that's a little bit conservative. One of the key drivers, as mentioned in this article, the retreat in the USD, is the strength of the US dollar. And if we take a look at the year-to-date performance of the DXY, as the DXY measures the dollar strength, we can see that just around the same time that gold started rising, DXY started falling. I'm going to do a video on this in the near future about the strength of the US dollar. But the last thing we'll talk about today is Bitcoin, as it has surged to $4,200, even as stocks and bonds take a hit. The rally has been driven by ETF hopes, as investors and market participants are expecting potential approval of a Bitcoin ETF by the SEC in January, and Bitcoin is on track for its biggest annual gain since 2020. So not much else to say, but it's surging in value just as gold is. They often say Bitcoin is digital gold. It doesn't produce a yield, just like Bitcoin. So when rates are declining or expected to decline, this asset becomes more valuable, you could say, relatively. In addition, when interest rates are declining, it's generally associated with, as they say, money printing, increase in the monetary stock, the M3, which leads to Bitcoin becoming more valuable on a term comparison. But anyway, this is what's going on with Bitcoin. It's rallied more than 150% this year. People still think it's disgusting, and rightfully so after the Sam Bankman-Fried FTX debacle. But people expect this Bitcoin ETF to be approved by January. That's what everyone's talking about. That's what everyone's expecting to happen. January is what everyone's saying. And so with crypto, you often see the prices surge in the lead up to an event. So as January approaches, people are going to continue buying. As the saying goes, buy the rumor, sell the news. So there could be a significant price increase continuing until January, and then potentially a sell-off when the approval happens or shortly after the approval, unless the SEC pulls the rug out from everyone expecting this. Who knows what will happen? But that's all for today. Thank you for tuning in. Have a great evening. And please subscribe, like this video, leave a comment if you have anything to say about this video or any questions or potential topics for the future. Thank you. Have a good night.